Let's finish up the question. Sedeco Nigeria Limited. I think last time where we stopped was completion of unit cost across to ABC and traditional costing, right? The next part of the question, B part, what's the requirement of the B part? Can somebody read out? The question is still on the platform. Yes, can somebody read that? Okay, so this has two. Let's get back into class. This particular requirement has two parts. The first part is complete expected sales price. And then the second part is with the expected sales price you've completed, calculate profit or loss under ABC and calculate profit or loss under traditional. So for the expected sales price, normally before now, we know that sales price is usually given straightforward. They tell you this good has selling price of 15 naira, this one has 14 naira, this one has 30. That one they're telling you explicitly that the sales price for each product is going to be 50, 40, 30. But now if you come to real life, they might know at the time they want to make the decision, they might know that there will be fluctuations. Let's pay attention. This part is very important. They might know that there will be fluctuations in their sales price. This is covered only under the topic we call risk and uncertainty. Risk and uncertainty, which we'll later look at when we do budgeting. But at this point, we just see how risk and uncertainty plays out in this sales price. Now they've given us the same expected sales price, right? Which means the selling price you're going to complete is not even really the actual, it's just an expected. Now, what is the information they give us on sales price and the question? Can we look at the last paragraph before the requirement? Can we see the company is considering the pricing of the because sales price have remained constant as shown in the table below. Can we see that? Yes. And we can see here the uncertainty for alpha, beta, and sigma. And then we can see the uncertainty. Under the uncertainties for alpha, we have the probability. We have the probability, and then we now have its sales price. Eventually, there is a topic we'll look at. Now, whenever there is uncertainty, the part of this uncertainty we are treating now is uncertainty, not risk. Risk is different from uncertainty. Risk is that there is possibility of loss, right? Or things going out. Whereas uncertainty is that not necessarily that there is possibility of loss, but that the outcome is not definite. You have possibilities of different outcomes. That is uncertainty. Now, when there is an uncertainty, the company has always, in fact, in every time a company is trying to predict, the whole essence of predicting is because you do not know, right? So you will only predict where there is uncertainty. If there is certainty, then it is not a prediction. It is what is going to happen. So now when a company is trying to predict, they will always fall back to data. Data is showing them that, okay, in year 2024 and year 2025, the selling price of this product was say 15 naira. In year 2026, the selling price of this product was 20 naira. In year 2027, the selling price of this, let's say we're in 2028, the selling price of this product was, let's say, 15 naira. Now they have three different selling prices. And they know how many times or how many occurrences each selling price has. So what the expected selling price does is that it uses probability to calculate average. Now, normally, if we have that selling price, let's say we have 5 different selling prices, 20, 20, 30, 40, 50. there are 5 different selling price here, or data in 5 different periods. The first period 20, second period 20, third period 30, 40, and 50. Abi? Yes. Now, if we are trying to get a simple average, to use average now to get one selling price, we will do 20 plus 20 plus 30 plus 40 plus 50. Is that not so great? And then we will now divide by 5. Alright? Now, if we want to now go through another means, we now bring in 20. 20 are played how many times? 30 are played how many times? 40 how many times? 50 how many times? Total of 5, right? So we have 2, 1, 1, 1, 5. Now, if we want to use this expected, we will see its expected value when we get to, that's the notion we usually use. If you want to see or use this expected value, what we are simply doing is, instead of arranging all the selling costs, this could be over 50 different data, or 50 data at different levels. So instead of us lining up the 50 data, if we want to use the average or going through it with expected that uses probability, what we'll just do is, the total is 5, right? So we know that probability is the frequency of occurrence over the total occurrences. That is what probability is. So the likelihood of having a 20 is 2 over what? 5, which is 0.4. Is that not so? Likelihood of this occurrence is 1 over what? Which is 0.4. Likelihood of occurrence is 0.2, 0.4. So obviously, when you sum probabilities, they must always give you 1. In add all of this, it will give you 1. Now, if you want to get the average, originally when we wanted to get the average by listing out, we just did 20, 20, 30, 40, 50. If we add all of this, it should give us, this is 40 plus 30, 70, this is 160 total. We have 160 over what? 5. Now, if we want to use expected, instead of going through it, we just multiply the probabilities by the value. So we will have here 0.4 times what? 20, which is what? 8, I mean. We have 0.2 times what? 30, which is what? We have 0.2 times 40, which is what? 8. And we have 0.2 times 50, which is what? 10. We sum all of this. Now this 8 plus 6 plus 8 plus 10. What would that give us? 32. 32, I mean? Yes. Now let's do 160 over 5. Also what? 32. So either way you go about it, you're still using average to even out the uncertainty. Just that probability now allows you, where the number of occurrences is too many for you to start calculating average, you just use what? So in expected values, they would always give you the probability of occurrence and then the value. All you just have to do is multiply the probability by the value and so on. So in other words, EV, in this case it is selling price, but I just use EV because it can be cost, it can be any other thing that has an uncertainty. So EV at any point in time is P1. P1 is the probability of the first value. We are calling these items values. So it is P1 V1 plus P2 V2 plus, since we don't know how many different items we have, we just use this connotation to show that it goes to as many as 2 plus Pn V. This is the expected value. This is just putting it in formula. The probability times the value plus the probability times the value plus the probability times the value. That gives you your expected value. In this case, expected selling what? Price. Now let's do it now in action for alpha. For alpha, we will have, what are the probabilities? Probability, selling price, expected selling price. Yes, 0.1, 6, 0.1, 0. must always give you one. What's the selling price here?
2,000.
2,000. Selling price here? 2,200. Selling price here?
2,003.
Now let's multiply. 0.6 times 2,000. 1, 2. 0.3 times 2, 2. 660. 0.1 times 2, 3. And when we sum up,
2,090.
2,090. This is our expected selling price for alpha. Now please do for the other two, for beta and gamma. Very simple, right? Very straightforward. Do for beta and gamma. Are we done?
Yes.
Okay. Now let's go. So, what's the expected selling price for Beta?
2010.
2110.
Yes.
Everybody got the same thing. And for Gamma,
1640.
1640. And they went further to say we should do what? We should calculate the profit, Abi,
Yes.
under both levels. Now we've already calculated the unit cost, right? So unit cost is simply going to be selling price minus the unit cost. That will give us the unit profit. Then if you want to calculate total profit, you just multiply by the total number of items. Right? So computation of profit. I will start with absorption or traditional approach. We have for alpha, for beta, for gamma, and one for theta. So I will start from sales. Sales per unit. Selling price per unit for alpha, expected selling price as we've gotten is 2090, right?
Yes.
For beta is what?
2110.
And for gamma is
640.
640. And we are going to less. And the cost is we have direct materially. You can just go and take the total unit cost already calculated, but it's always better to present your profit statement completely, right? But it will still give you the same result. So direct material as we've gotten was per unit for alpha is what? 250,
280.
200, 180. We will have direct labor,
1800 and 400.
800 and 400. Then the next cost is fixed production overhead, Abi.
Yes.
Now the one we are bringing here is the one under absorption for tradition, which was what for alpha?
531.25.
For
25.
and then we'll now subtract all these costs from the selling price. And we'll get the profit per unit. Three zero
875.
8.75.
Yes. Six eight five. Eight four seven five.
8.725. And then we would have, since they say we should calculate total profit and profit per unit, we are going to multiply each by number of units. How many units did we produce and sell for alpha? 2,000?
Yes.
2,000 units. How many for
20,000.
20,000? For beta is what? And then 5,000. So we're going to multiply the profit zero 8.75 times 20,000. 175,000.
million.
Okay, 6175.
The next,
Yes,
8,62,500.
562,500. And next,
1,237,500.
4,000,500.
2,7,500.
And the total profit for each of them, for all of them, when you add all of this, let's bring this total together. Mm, So this total profit under absorption. Now computation of profits is under ABC. So it's going to have alpha delta gamma. Sales by unit. 0, 2, so everything is the same on this side except for fixed production by direct material. 250, 180, direct labor, 1,800, 400. So what are the fixed production overhead figures for ABC? For Alpha is what? 303.
0.875.
87.8.
393.8. Yes.
And then
1,2.
1,200.
Yes.
Subtract all. So profit per unit.
Thank you.
What do we have here? 55. 155. This 75. Okay. 536.125. So just go ahead and multiply by 20,000. So next one. times 12 by 390. Yes, 390. 952.
500.
And that's one. One seven.
Negative.
Okay.
140.
So 40,000.
Negative 700. 100,000.
Now when you're adding, subtract 700,000.
Eighteen 975.
18,000.
Yes.
So all the same, profit is still the same again
Yes.
on both angles. The only thing now is that individual profits of different products now under absorption costing, you're seeing gamma recording profit of 4237. So the manager of gamma will definitely be appraised for. But now when they switch to ABC, they can now see that actually gamma is using a lot of company's resources and they are actually not profitable. So while in absorption costing, they will be talking to or they will be measuring all of them as the same and not being able to track which cost to reduce. Using this one, you'll be able to track that gamma is actually spending too much. Choose whether to discontinue gamma or continue gamma or task gamma with better ways to reduce cost or increase. So is that all the requirements?
No. There is 600.
Okay, what's the last requirement?
Excuse me.
Yes.
Our major problem of this gamma issue is the fees of this overhead because it's too high.
Yes, that's the main. In fact, that's the whole essence of ABC.
Because the fixed because it's too high.
You know, the fish production overhead cost is the same, but it's how they split it across the units. So in the former, they were splitting more to alpha, 425 to beta, and then 212 to gamma. But when they now reorganize this, so that gamma is actually taking 1,200 of its cost. So this is where the attention will now draw line to. The total cost of the company will still remain the same, but at least now the company knows better which product is using a lot of money.
Reducing that profit.
Exactly. So is there any other question?
Yes.
See. Okay. What's the requirement?
State reasons why activity-based costing approach can be preferred to traditional absorption costing approach in modern manufacturing environments.
In modern manufacturing. Okay. Now, this would also help us because I also include this. When we treat topics like this, we tend to focus on the calculative part. But every topic, even a topic that has to do with calculations, theories, if you go to this topic in your pack, you see where they would have explained the benefits of ABC, benefits of absorption costing, which while we are teaching, we can just tell you tentative benefits. But in a question like this now, they're expecting you to give 2, 3, 4 benefits. And what I'll just tell you is the normal benefit, but when you're reading back, always try and read those advantages. Just sketch it so that in case it comes out, you have something to say. So basically, the major benefit, you actually track your fixed production overhead better under activity-based costing because each element of the overhead is being allocated by the driver. In this case now, we have summed the whole overhead and allocated on one single basis or using one single driver, which is direct labor hours. But when we came to ABC costing, each element was allocated using the appropriate driver, which means that you will be able to track the expenses to the department or to the product that is actually used. That is the major benefit of ABC. But when you go to your pack, you see them give other things. So please always try as much as possible. When you finish reading the topic, you just go, or you finish teaching the topic, you just go and sketch it. I think there was an assignment on chapter 1. Have you done it? There's an assignment to go through chapter 1 of your start. Have you read it? To an extent. What was the chapter again? Can someone remind me? Management information system. Okay, I know that we are like half of this class when we give the assignment. So I'm going to give the assignment again this week and check it next week. So please read chapter 1 is basically it is solitude. So please read chapter 1. We'll discuss it by next Sunday. Then I'm really copying this so that we can move on to the next question. Please read chapter 1 by next Sunday. Checking. There's just a question on the group. Everybody's to attend. Still on ABC versus absorption. Just attempt the question. Let me see how we have comprehended this. progress.
So I see all of that. Toasting is not coming.
Yes, we know.
So if we are,
We know.
you know why I'm telling you. Because this class can continue beyond the years, beyond the school time.
Okay, so has any of us been able to solve?
You didn't know.
Yeah.
It's the only.
But we just did the question. Where should we look from? This question is not similar. This one is not similar. This question is not similar to the one.
It's similar, but there's an adjustment to this.
Okay, so I just want to know, how did we go about this attempt? For those of us talking, how did we go about it? I know in the last one, the first thing we did is, you have a selling price, where we think because you have a direct material, but they will not split overhead a bit. But this question particularly is not telling us to do all of that. They're telling us about the reduction, right? So how did we go about it? Yes? Did we apportion?
You're supposed to apportion, saying production set of 10 per month, but the driver is 2 per month.
Okay, let me use that so that I can okay. So we have Lunda Limited manufactures a range of products, many of which have short product life cycles. Research and development staff recently designed 3 new products which will be manufactured in a single production cell of the company's factory. The combined monthly manufacturing overhead cost of the 3 products are summarized as follows. So this is the manufacturing overhead. We have production setups, and you can see that the driver there, okay, they already got this production setups,
Yes.
right? And they're telling us there are 10 setups per month.
Per month.
So that 10 setups is the driver, Abi, giving us a total of 200,000, Abi. We have material movement. Material movement, we have 400 material movements per month, which cost us a total of 1.8 million. We have repairs, 4,000 repairs per month, costing us a total of 3 million. And then total manufacturing overhead, when you sum it, it's 5 million. The following information is available concerning the 3 new products. Production and sales per month is 2,000 units for product A, 5,000 units for product B, and 1,000 units for product C. The labor hours per unit is 4 and 8. The company's target costing task group expressed the view that the new products will not be profitable, given the likely market prices and cost of manufacturing the products using the product proposed design. In response, the product designers indicated that no design changes. So basically, telling you that it will not be profitable. None of the products are going to be profitable because of the cost and the likely market price. Now, the designers, obviously, they will leave back to the designers this is what the designers came up with. That no design changes were possible in relation to product A or B, but that changes in product C will bring about the following reduction. So they can change the design of product C, and it will bring about the following reduction in the amount of monthly activity involved in manufacturing that product without compromising the quality. So they are saying they can design product C and it will cost them this reduction. So designing product C would reduce production setup by 2 per month, material movement 100 per month, repairs 1,000 per month. That's what's changing the design of only product C. So this reduction is for product what? C. This, when they were giving us the 10 per month, 400 per month, 4,000 per month in overhead, they are talking about the total for all the products, not just for product C. But then they're saying this reduction is in the one for product C. Like in the previous ones we saw, they gave us for alpha, for beta, and for what? Sigma, and for gamma. But in this one, they are giving us the total and not telling us that we can reduce for product C. Now let's go to the requirements. Calculate the reduction in the cost per unit of each of the 3 products, which will occur as a result of design changes to product C in the following circumstances. First circumstance is manufacturing overhead are allocated to products using ABC, and second is manufacturing overheads are allocated to products on direct labor hour basis. Now this is completely different from the previous one, in that we are not calculating unit cost. They did not say calculate the unit cost. In fact, we don't have enough data to calculate the unit cost. There's no data about direct material. There's no data about direct labor. There's no even data that we can use to split the overhead into the 3 products, right? They did not give us a way for us to apportion it. They only gave us data we can use to know how much the overhead will be reduced. Now, they are saying we should calculate how that reduction will be apportioned amongst the 3 products when we use ABC and when we use absorption. Now, I will now bring us back. Or I will now, this now will be the task, and this all I actually wanted. I think to know the question. It's the part I just want us to understand, which is where the question is driving. When we use ABC, right? If we use ABC, the whole point of ABC is so that we can allocate cost to where it is at. Yeah. So if we are to use ABC, and they're telling us that we are redesigning only product C, right? Yeah. And this reduction would affect only product C. So if we are using activity-based costing, will the reduction be applied to product A and B? No, it will not be applied to it. It is only that one that had that reduction that would absorb the entire reduction. Because that's the whole point of activity-based costing. That you don't transfer what I gained to another department. So if product C is the one that is getting that reduction, the full reduction should go to only product C. But using absorption costing, we don't use the drivers. So even while the drivers of this cost in product C is making the cost reduce, absorption costing will still use direct labor hours. And the direct labor hours reduced for product C. Direct labor hours remain constant in both cases, which means that reduction will be applied to both A, B, and C. So the task will just be, first of all, calculate the total reduction. When you calculate the total reduction, for ABC, that total reduction is going to only product C. But for absorption costing, it will be absorbed using direct labor hours to product A, B, and C. So now let's start with calculating the reduction. And calculating the reduction, they gave us the reduction. They don't give us the reduction in figures. What they give us the reduction in is in the drivers. And the drivers, they are production setup, material movement, and repairs. Are we? Yes. Are we going to convert it now to figures? Yes. How are we going to convert it to figures? To reducing 2 production setups. They initially said 10 production setups. Let's go up to the initial overhead information. 10 production cost us 200,000, I mean.
Yes.
So if we want to reduce, that 2 will be worth how much? How do we get the value of the 2? That will be reduced. 10 cost us 200,000. We are reducing. If 10 cost us 200,000, 1 cost us how much?
20,000.
And that 20,000 is the overhead absorption rate. That's OAR we are calculating before. That's so if you know that 1 cost us 20, then 2 will cost us how much? 40. So the reduction for that setup will be 40,000. So we'll just do computation of cost reduction. So the first one is setup, Abi. So we calculate setup OAR, overhead absorption rate. Is the full setup cost is 200,000, Abi?
Yes.
All over 10 what? 10 setups, which will give us 20,000 per what? Per setup, Abi?
Yes.
Now the reduction, setup cost reduction, they said the reduction will not be using 2, Abi? So it will not be 2 times what? 20,000. So the reduction in setup cost is 40. These are 10 points you're not following. Drum us back so that you can get. Now, what's the next one? The next thing that's reducing material movement. So we have material movement OAR. What's the total material? 1.8 million. And how many material movements do we have?
400.
400 movements. So it will be how much per movement? 4.5 per movement. So now to get the reduction, movement reduction cost. How many movements are we going to, or how many movement goes from this design? 10. 100 movements, Abi. So that gives us a total of what? 450. The third one is what? Repairs. Repairs OAR. What's the total repairs? How many repairs do we have? 4,000. So that gives us how much? 750 per repair. How many repairs are we reducing?
1,000.
Repairs reduction is equal to 750 times 1,000, which will give us what? So we've now seen that because of this redesigning of product C, setup or setup cost will be reduced by 40,000. Material movement will reduce by 450, and repairs will reduce by 750. Total reduction plus 450 so plus 750, which gives us
1,240,000.
So now using ABC, 1,240,000 reduction will be allocated only to product work. What of using the next one is using what? Absorption. Now using absorption, it's not going to only product C. It will go to shared even across the 3 products using direct labor hours. Now do we know the direct labor, total direct labor hours? Because now we have to apportion it to the 3. They gave us per unit, Abi. We have A, B, and C. Direct labor hours per unit. How many units per? How many hours per unit for A? 6. For B?
4.
8. You know that we cannot use the unit to allocate. We have to use the total to allocate. How many products or units produced? 2,000 abi? How many? And then 1,000. We multiply 12,000, 20,000. That means total direct labor hours used is 12 plus 20 plus 8, 40,000 hours. Total hours. So this 1,240 is an absorption allocation of cost reduction. The cost reduction in question is 1,240, abi? To A, B, and C using direct labor what? Hours. So when we are allocating now, we would have for A will be 12,000 all over the total hours, which is what? 40,000 times 1,240. Which should give us what? Yeah. 70,000. So it will be 8,000 over 40,000. Yes. And then two hundred and 50. Calculate the three. It will still give you 1,240. If you still wanted to use OAR to do it, you just do 1,240 divided by 40,000. That will give you overhead per hour. Then you now carry per hour and you multiply by the total number of hours, right? Across. You still get the same figure. So now using ABC, the 1,240, A will absorb 372,000, B would absorb 620, and C would absorb 240. That is the requirement. Yes. Okay. November 20.
turn out. Here we are saying that you need, okay. Because I was looking at this one. In adoption, why are we allocating the cost to the total cost to all the product? Yeah, instead of C.
So just here.
Yeah.
It's because the absorption is labor hours.
Okay.
And the labor hours will be
Right.
seen. They did not tell you. If they said now that labor hours will be used for this, then it's good to do this.
Okay.
But this one to the thing, exactly. Are we done? Okay. Whiteboard.
Yes.
So now we are moving to another like gave us four costing systems, and I told you they usually set them together. So we just treated ABC versus absorption costing or traditional costing. And we are looking at now marginal costing versus throughput account. Now absorption costing, as we see, recognizes fixed cost of production, right? In producing their income statement. Now for the purpose of your FR, your financial reporting, absorption costing or financial reports are being prepared using absorption costing. If you check your income statement, the items that you're seeing there have both fixed elements and variable elements without there being a distinction between the two. So the basic use of absorption costing is for reporting. Whenever we report financial statements, we use absorption costing. But then most managerial decisions use absorption costing. They use variable costing techniques. And the variable costing techniques we know is marginal costing and also throughput. The only difference now is that throughput does not take all the variable costs. It just takes one, which is material cost. That one, they usually call it the bottleneck resource, which would, oh no, not really the bottleneck resource, but it takes basically the material cost. Whenever we are looking at marginal costing versus throughput, or whenever the questions come out, the questions will come out in the nature of the management decision they use it to make. So they usually set it using the nature of the management decisions they want to make. And the nature of decisions is decisions where there is a bottleneck resource. They are trying to maximize output with a bottleneck. Now, what is a bottleneck? A bottleneck is a constraint, right? For instance, we want to treat the 36 chapters in PM, but there is a bottleneck. There's a reason we cannot finish it. And what is that bottleneck? So bottleneck resource is that resource you don't have it in infinite amounts. You have it in finite amounts. So you being able to allocate your bottleneck resource very well would mean or would show how profitable you will be. If we decide to use our bottleneck resource, which is time, to treat the theoretical topics that may not really have much weight in the exam, then our output will not be maximized. Because you can go to an exam hall and then you have only 30 marks or 30 marks total, which you can use the teaching of this class to attend. So that's the maximization of bottleneck. And those are the kind of decisions we want to make. So when they are trying to make those decisions, they will now compare the decision under marginal costing, which takes cognizance of all the variable costs. versus throughput, which takes cognizance of only material cost. Now let's take them. Steps in maximizing output. Steps in maximizing output where there is a limiting factor. Steps in maximizing output where there is a limiting factor or bottleneck resource. Where there is a limiting factor or bottleneck resource. This is bottleneck resource. Steps in maximizing output. Output can be in number of goods produced, can also be in profit. It depends on the question. We'll tell you what you're trying to maximize. Steps in maximizing output where there is a limiting factor or bottleneck resource. Now remember I told you this can be done using marginal costing. Now, first step one, identify the bottleneck. Identify the bottleneck resource. Identify the bottleneck resource. Identify the bottleneck resource. Let me give us an instance. Still using this class. Let us say that we have over 100,000 teachers in Port Harcourt that can teach audit or that can teach FM. And we have only 2 teachers in Port Harcourt. And we have 10 tutorial centers, right? And each tutorial center needs a PM teacher and a teacher for FM. Between the FM teachers and the PM teachers, who is the bottleneck? PM. Because there are not enough PM teachers. But there are more than enough FM teachers. So some cases, they will not just outright tell you this is the bottleneck resource. They will tell you what the company seeks to produce. Let's say they want to produce 1,000 units of A, 500 units of B. Then they will not give you everything they need to produce it. Labor hours, materials, and all of that. Then they will not tell you the availability of each resource. Now, if you check the availability, check materials, and the materials available is more than enough to suit what they need, right? Suit their requirement, their material requirement. You check the labor hours. The labor hours is more than enough to suit what they want to produce. They have enough labor hours to deploy. Maybe it's not the skilled labor that is needed. And then you now check, say, another resource, say the machine hours. And then you now see that the machine has a finite number of hours it can use to perform. And the goods they want to produce, the machine does not have enough hours to be able to furnish those goods. Then what becomes your bottleneck resource? Your machine hours. So that's what step one is, identify bottleneck resource. Some cases they may just be generous, they may tell you this is the bottleneck resource. But if they are not, you just compare availability of resource against the requirement for the resource. The one where the availability is not enough to meet the requirement is the bottleneck resource. And we'll still look at this constraint analysis as a topic of its own, limiting factor analysis, where we will now see situations where there is more than one bottleneck resource, where this analysis we're going to do will no longer suffice. That's where we will now see linear programming. Probably going to be our next topic. Linear programming is where you have more than one bottleneck. So this simple analogy we will do now will not suffice. But bottom line is identify bottleneck resource. 2. Calculate contribution. Calculate contribution. You put in brackets marginal costing. I just want to shorten it, MCT. Contribution in brackets, marginal costing. And throughput in brackets, throughput accounting. Second step. Calculate contribution in brackets, marginal costing. Or not calculating will depend on which method you're using. If you're using marginal costing, you should calculate what? Contribution. And we know that contribution is equal to sales minus variable what? Cost. And in the other case, throughput is sales minus what? Material. Done with this. Step 3. Yes? Step 3. Contribution or throughput. Calculate the contribution or throughput. Calculate the contribution or throughput. Calculate the contribution or throughput per bottleneck resource. 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 So let's say we have product A, B, and C. Contribution here is 30, 40, 50, and the bottleneck resource is machine hours. A uses 2 machine hours for each unit. B uses 2 machine hours. C uses 5 machine hours. The contribution per bottleneck will just be to divide it. 30 divided to 15 per hour, 20 per hour, 10 per what? Hour. That's the next thing. Calculate the contribution or throughput per bottleneck. So 4. Rank the product. Rank the product. Rank the product. Rank the product. Now, if you are to rank now, which product is most desirable? Product B, I mean? Yes. Because it gives us the highest contribution per bottleneck what? Resource. So we'll rank this as A or 1. You're using 1, 2, 3. This is rank 1 or first. Which one is next? A, I mean? Yes. And this is what? Third. Assuming there was no bottleneck, then which product would have taken the first rank? C, I mean? Yes. But now C is taking the third what? You see what bottleneck does? Without a bottleneck, a product can look so desirable. But when you now see how much of your time is going into, then you now know if that product is actually desirable or not. So we don't rank at the contribution part or the contribution level. We rank at the contribution per what? Bottleneck. So that's the next rank the product. Step what now?
5.
Step 5. Allocate resources based on rank. Allocate resources based on rank. Allocate resources based on rank. Allocate resources. Allocate resources based on rank. Based on rank. Which resource in particular are you allocating? The bottleneck, because that's what we have limited. So that's what they're simply telling you to do. Which product will you first exhaust first in this case? B,
Yes.
Produce as much as we are being sold or can be sold.
So-
Let's say you don't can produce more than what the demand is. So you produce as much as B, then you now move ahead to produce what? A. If you still have more, you can now go ahead to produce what? C. Allocate, and then the final one is calculate the profit. Calculate the profit. Calculate the profit. I have an illustration with us. Check the group. Are we there?
Yes.
Ideal.
The last chance.
You please like one.
Yes. Okay, this is November 2020. That was November 2019. Okay, this is November 2020 question 2. Carries 21.
The light is on two.
November
That would be a 5%.
2020. Question 2020, November 2020.
Joy.
Okay, so I'll read. Ideal Nigeria Limited manufactures two products, light and medium, on the same machine. Sales demand for the products exceeds the machine capacity. That information tells you that what? Machine capacity is the bottleneck what? So this one is without units exceeds the machine capacity of the company's production department. The potential sales demand in each period is for 10,000 units of light and 15,000 units of medium. Sales prices cannot be increased due to competition from other products in the market. The maximum machine capacity in the production department is 40,000 hours in each period. The following cost and profitability estimates have been prepared. We have the selling price for light and medium, 110, 135. We have the material cost, 50, 45. Direct labor and variable overhead, 30, 55. They already calculated the contribution per unit by deducting material, all those variable costs. We deduct 50 and 30 for month. We have 30 and do the same for medium. And they give us the machine hours per unit, which is the bottleneck resource, 1.5 and 2. Fixed costs in the period are 450 what? Required. 1. Using marginal costing principle. Calculate the profit maximizing output and amount of what? Profit. So we just go using this is A, using MCT, marginal costing. And we have two products. We have light and we have what?
Medium.
Medium. Create a column for total. Now normally, the first step is identify bottleneck resource. Abi?
Yes.
That's already been identified. Machine hours. If you wanted to also identify it, let's look at it. How many products of light do they want to produce? The demand for light is what?
10,000 units.
Medium is what?
15,000 units.
How many machine hours does light give? Machine hours per unit.
1.1.
And medium.
Wow.
And let's multiply. You use 1.5 for 10,000 units, you'll be having 15,000. Okay? You use 2 for this, you'll be having what? So we need 45,000 machine what?
Hours.
For how many machine hours in total do we have maximum? 4,000. Yeah, enough to meet up 45. So that shows us the bottle. Just in case they did not tell us, this is how you do. Right. So now light, medium, total. The step 2 is calculate contribution for marginal costing or throughput.
Yes.
So they've already calculated contribution for us. So they've done step 2. So we just have the contribution that has been calculated. What's the contribution per unit for light? 30. For medium?
35.
35. Next step is what?
Calculate the contribution of throughput by bottleneck.
Bottleneck. So we bring in the bottleneck, which is machine what? Machine hours per unit. In this case, it is what?
15,000.
No, per unit. Per
1.1.
unit. And here it is 2 hours. Then the next is now to calculate the contribution per bottle what? That's contribution per machine. So it's just to divide again. 30 divided by 1.5. Yeah. 35 divided by 2. 17.5. Next step is to what? That's what we just did. This is the ranking. Which one takes first? Light takes first. This takes second. Assuming there was no contribution per bottleneck, medium would have taken first. But now there is bottleneck. This takes first. Now the next step is to what?
Allocate based on the rank.
Good. Allocation. And usually I like to create an allocation table. But because there are 2 products, we'll not create an allocation table for this one because there are just 2 products. In the next question, we'll do with 3, 4 products. We'll create an allocation table. Now, what we are going to do in the allocation table is we start allocating to the product with the most or with the first what? Rank, Abi?
Yes.
And that product is what? Light. So allocate. Now demand. Now what's the demand for light? Yes? 10,000 Abi?
Yes.
Demand for light is 10,000. Now let's see if we have enough machine hours. Because we are allocating based on the bottleneck. Is the bottleneck? Do we have enough bottleneck to manufacture all units of light? Each unit of light has how many machine hours? 1.5. So to produce or meet up this demand, we need a total of how many? 15,000, Abi?
Yeah.
We have about 15,000 in this 40,000.
Yes.
So we can meet up the entire demand. So what we are going to produce here is 10 what? 10,000. Now we have 40,000 machine hours. We've used up now 15,000, Abi?
Yes.
How many do we have left?
25.
This is what we usually put in the allocation table. Allocation table will show, to show the bottleneck, it will have a column for the rank for the product, and it will have a column for bottleneck left. You understand? So at every point in time, you should know how bottleneck that's left and know the demand for the next. So we have 25,000. Now for medium, each unit of medium requires how many machine hours? 2. look at what we can actually produce. So how many can we produce? 12,500, which is 25,000 divided by what? 2. I know it is not up to. That is why it is a bottleneck. So we're telling them, we know you could demanded 15,000, but we have just enough machine hours to produce 12,500. Now, for a manager that does not know this limiting factor analysis, they will just do this tentatively. In fact, just produce light, produce medium. The manager that is using this principle wants to use the method that will give him the maximum what? Profits with the bottleneck. And that's the reason for it. So what we will produce is 12 what? 500. I mean? Now next thing is now to now calculate the profit, but before we calculate the profit, we'll bring down again this contribution per unit. Contribution already calculated is 30 and what? 35. Then we will now get total what? Total contribution by multiplying. So we are going to have 10,000 times 30, 300,000, 12,500 times 35. 437,500. Now, if you add this to what will be total contribution for both sides, 500. It is at this point we now bring in fixed cost. It's when we are using marginal cost, you never separate fixed cost. It's in absorption that we separate and absorb. In marginal costing, fixed cost has nothing to do with the product. Right? We finish with the product, set the total contribution. Then we now just less fixed cost. So we now less what? Fixed cost. And fixed cost in the period is how much? 450,000. So the profit using MCT will be what? 287. Now, if you want to put this in theory, it will now be that the profit maximizing output is 10,000 units of light and 12,500 units of medium, giving us a total profit of what? 287,500. That's how I put it. Now we go over to the next using what? Throughput. Light, medium, total. Follow the same steps. And they did not give us throughput, right? What they gave us was contribution. So we have to calculate our throughput. And throughput is sales less material cost. So bring in sales per unit here. What is the price per unit? 110 and 135 less direct material. Here's what? 50, 45. So this gives us our throughput, which is what? 60 and 90. Next is calculate the throughput per bottleneck resource. Bottleneck resource is machine hours per unit, which is 1.5 and 2. We divide throughput per machine hour, 60 by 1.5, 45. Next is to run first and then second. Next is to allocate. So if we are allocating based on the amount, we first meet which one? Medium, and medium we need 15,000, giving us a total of 30,000 machines. We have up to 30,000 is 40,000. Yes. Yes. So when we remove 30,000 from here, we have how many left? 10,000. So we produce all the units of this, which is how many? 15 will meet up the full demand. Then for this one, we have 10,000 hours left, and each unit uses 1.5. So 10,000 divided by 1.5, how many can we produce? 6667. In products, you don't have decimal. You don't have decimal product, except it's a product that's weighed in kilograms, right? So you just approximate 6667. So yes, we demanded 10,000, but because of our bottleneck, you can only produce 666 what? 7. Some questions can tell you what is the shortfall. The shortfall is 10,000 minus 666 what? 7. So now we now go ahead to now bring back the throughput again. Throughput per unit 60 and what? 90. And then we multiply. Total throughput. Four.
420.
This one?
Yes.
420.
Yes. 420 naira. As in 400,020 naira. 400,020 naira.
Like this.
Yes.
And then 15,000 times 90. 1,350,000. Total throughput. Add it to 1,700. Now what we are listing here is not fixed cost, so it's all the other costs apart from material. If you bring fixed cost here, that means you've omitted that direct labor and variable overhead, which is wrong. So in throughput, what we less from the throughput is not the fixed cost. It's what we call total operating expense. And the total operating expense will come, this is working, will comprise of all the costs apart from direct what? Material. And the costs include, the first one is what? We have direct labor and variable what? Overhead. Please refer to the question. Variable overhead,
Yes.
and for that one, they gave us for both light and medium.
Yes.
Light was how many per unit? 30. But we have how many units of light? When they made that, 10,000, I mean, giving us 300,000. And medium, 55, I mean. It was 55.
Yes.
55 times how many units? It's not the allocated units we use to calculate it, it's the full demand. Because when they calculated this 30 and 55, they used the full demand. So 55 times 15,000, 825. When you add the two of them, 1125. Then we now bring in fixed cost, which is the second one, 450. So total operating expense now is what? 1,575.
Yes.
So we have less total operating expense gotten from working one. That gives us 1,525. So what is the profit here? Zero two. So in your theory, you'll be saying the profit maximizing output is 6,667 units of light and 15,000 units of medium, giving us a total profit of 225,020. What is the other requirement? Just for the because I have to rush out so that I can just. I know. You have time to respond. Okay, explain how throughput accounting differs from marginal costing. First thing is that throughput uses throughput, which is sales less material. This one uses contribution, which is sales less all variable cost. Another difference, marginal costing deducts fixed cost from total contribution. Throughput deducts total operating expenses. Right. Then the last one is okay, calculate throughput. Don't worry, we'll come back to that to rush out. Calculate throughput accounting ratio. Please, we'll do that in the next class and solve a different question. Please remember the assignment. Go back and read chapter 1. Go back and read chapter 1. And have a nice evening.
Thank you.
Thank you, sir.
Running back.